All right. Hello, everybody. This is Scott Hudsmith. I'm here with my dear friend and business partner, Carlo. What's up, buddy?
What's going on? I hope everyone's
Let's
doing
go.
well.
In this beautiful football. I hope your teams are winning and you're just having a good time enjoying this little fall weather and all kinds of cool stuff.
Yeah, man.
So I'm having a
Where I am, the
challenge
city is
here.
electric right now.
Who's that?
I said where I'm located, the city is rocking right now, man. We got both of our teams are crushing it right now.
Yeah. Cool. All right. You know what? I got two monitors now, so I don't even know how to turn off the one.
That's when you know you're legit, man. When you got the two
That's when you
monitors,
know when it's getting real.
getting
All
real.
right. Can you now what can you see? Can you
I can
see
see, I can see four essential loans for more closings, and then off to the and then the full disclosure. I can see
you feel
both.
okay, you see the full disclosure. Okay. All right.
Yeah, yeah.
Let me just see screen, black screen, white screen, swap displays, use slideshow.
Yep.
Oh, how about that?
That's sweet.
All right.
That's
So
sweet.
everybody, welcome to Fresh Agent Marketing. Super excited to be here as always. Welcome to this Tuesday. We have an amazing class planned for you. I'm super excited to share. We're having a lot of fun developing these, not developing, talking about these programs, sharing these programs. The bigger part that we're here for is to help you as an agent to have conversation piece. Arrow in your quiver, I like to call it. As Carlos says, conversations equal closings, right, Carlo?
Absolutely. And one of the things that I'm so excited about this class, this meeting today is that we're going to share with you things that are working right now. Like not things that we're not going to give you ideas of things that might work. I literally got six buyers yesterday from what we're going to share with you today. So I hope you're excited about it. And I was just asked to go speak at one of the um, at a real estate office here by the broker owner reaching out to me. He's like, "Hey, I heard about this class that you're teaching. I want to know more about what you're doing. Come in and speak to all of our agents." So six buyers yesterday alone. So what you're gonna like our main goal is that we give you actionable content that you can run with right now that you can implement literally when you're done this session. That's our goal. We want you to take it and run with it and help you to get more business right now. That's our goal.
Right now, yep. So I think knowing about, so we're going to go over a lot of guidelines, which you don't necessarily need to know the guidelines. Just full disclosure, these loan programs and guidelines may be different. They may change and they might even be discontinued by the time we're done with this call. So, in our industry, as you know, things are changing at a very fast pace, but I think the programs we're going to talk, well, I know one of them's been around longer than I have, the 20 FHA 203K, and then the home ready, I think, or the home one is, is a good one. So there's a couple things. So confirm, like, I want you to confirm with your lender. Go back to your lender and say, hey, do you have these? What does it look like? Let's talk about it, because I want to talk about it. And here's the thing, going back to I'm going to say it a lot, conversations equal closings. The more conversations you have, the more stuff you share on a regular basis, weekly basis. I would be calling your database on a monthly basis, sharing with them a new story, tie it to a story of one that we share with you today, one that you hear from another real estate agent or loan officer. Like, you can use those stories to help people get into homes today. And if you missed the class, cost of waiting, go back and watch that for sure, because you tie these in to that and you have a ton of ammo when it comes to having conversations. Not only that's going to, I think, help your confidence, when you're talking to people. So regularly consult with your lender for updates on new programs and guidelines as they frequently enter the market to enhance. There's always new stuff coming. There's always new investors coming in. So do that. Staying top of mind. That's the number one thing we try to do here at Fresh Agent Marketing, is to help give you stuff to stay top of mind with those that already know, like, and trust you, but more importantly, help them to remember who you are and what you do for a living. So ensure your clients are informed so that they can confidently refer you to their friends, family, and coworkers. Position yourself as the go-to agent for all home types and programs, and leverage the programs as discussion topics with your database using stories, whether yours or others. Conversations equals clothing. So without further ado, talking points. I'm going to go real quick just to the four loans, and then I'll go back, Carlo, and then we'll kind of talk about the talking points. But we're going to talk about the DSCR. Man, the more the best part about my job I call it my job, but it's pretty dang fun, is like I put a lot of time into this. You know what I mean? I Googled DSCR till I literally 4 o'clock this morning. I'm like, more, 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 give me more, give me more. What's all the tricks and all the delicacies of the DSCR? So debt service coverage ratio loan, the 203K loan, been around forever. It's an amazing loan. Carlo's going to talk about some really popular points that has to do with that. And then more importantly, the FHA 2 to 4 unit home loans. This is going to be a big deal when it comes to people wanting to buy a home, and Carlo has some stuff about that, and then the home style loans that we're going to talk about. So let's go back. Let's go back one, and well, let's just jump right in. You want to jump right in, Carlo?
Yeah, let me, if I may, let me just chime in real quick,
Yeah.
just on something that I think is really, really exciting and important. I find that a lot of realtors and lenders alike are in this market trying to convince people why it's
Mm,
still a good time to buy.
mm,
And I have to say that I don't do that. I would rather help those who want to buy who may not think that they can. So through education and helping and bringing these loans and sharing the different guidelines and opportunities, I'm more of the, hey, did you know? Were you aware that you can do this, that you can do that? The 6 referrals that I got yesterday from my agents, not one of them did I have to talk them into buying a home with high interest rates. They all wanted to buy. They
mm,
all want to buy. Now, I have to get them approved. That's my job to understand all of that, which is your go to lender's job, is to help you and support you. But the thing is, I encourage you to take information and share it, because you're not only going to be the go to lender or the go to agent that they trust. Because here's the thing, when someone learns something from you, then you're now positioned as the go to expert because you taught them something. And that's much better than somebody trying to convince them to do something that they may not want to do. And I'll just
mm,
share one last thing and then we'll go, because we want to make sure that we have time for everything. A lot of times you have to understand that someone, when they see that we're trying to talk them into buying a home, they're thinking to themselves, well, of course you're saying that. You get paid to say that. That's your job, is to get paid. But let me share with you what I like to do. Is I like to say my job is to help you get what you want. I don't get paid unless I help you.
mm,
I get
mm,
paid to help you. Do you see how that slight positioning is very, very different? And then all of a sudden, when you're talking to someone, they know that, like, of course you get paid to help them. That's why you're going to work as hard as you can to get it done, rather than you sharing something with them that's like, well, of course you're saying that you're trying to get me into a home. So this will help you to have conversations. By the end of this, you hopefully will never have to think about what you can talk to potential buyers about. Conversations lead to closings, and that's what we want to talk to you about. So super excited about it. Just wanted to throw that in there, Scotty.
Sweet, I love it. And you came up with this morning, and I'm like I got chills when you said it. So like when you're talking about, and explain this, but 1 year's income in 12 months. So how to go buy a home, not maybe the perfect house, using the 203K, using the home style. Like, so one of these, like buying a 2 to 4 unit. We're gonna go over a couple different ideas there, but buying something that may need a little bit of help, right? The home. It's not the
Yep.
perfect home. You don't walk in, it's not brand new, but like you're buying it at a discounted rate, right? And so at the end of the day, when you do the repairs over a period of time, or with the 203K loan, you can do it right inside the loan. With the home style loan, you can do it right inside the loan. So think about Mr. Buyer, like, and I love how you said first time home buyers, help them think like an investor. Share with them what's going to happen if they do get into a home, not the perfect home, but a home that may turn into a huge windfall with them.
Yeah.
Um,
I mean, what I always
but
like to do when I'm speaking to clients, we all have those buyers, especially first time home buyers, that you've been working with them for months. They don't like anything that they see. You're running them all over town. You're doing everything you can, and they're trying to find the perfect house. And what I say to my clients is I empower first time home buyers to think like an investor, because they don't think that they are. They don't identify, they don't see themselves as an investor. So what I say to them is, when they call me and I'm like, hey, how's the house hunting going? How's the house shopping going? I haven't found the perfect house. And then I shift their mindset. I'm like, well, is it the right investment? And they're like,
Mm,
well, what do you mean by that? And I'm just like, well, let's look at it this way and get them to think a little differently. So that way, like when they have that perfect house and they invite their mom and their dad and their dog and their cousin and their uncle to because they need everyone's approval on the house and everyone's input. And they're like, well, yeah, the kitchen's this and it's dated and it's this. They can say, you know what? Absolutely. And that's where the opportunity is. And that's why I'm
mm.
looking at it this way. So when we can get our clients to shift maybe how they see themselves and empower them, you're going to have different conversations with them than them trying to find the perfect house. So that's definitely one of the things that I like to do. And then also with the 203K loan that we'll talk about, it's a great opportunity for them to get into an equity-based situation. And again, they're not looking at it as the perfect home. Is it an investment opportunity?
Love it. So is it the right investment? Huge plan, like huge,
Yeah.
right? So let's jump right into DSCR. So DSCR is I don't know who thought of this, but it's one of the coolest, most impressive loans that I know. It's not based on a client's income. It's based on the property and what it will bring in, market rent. Okay. I'm gonna throw out a couple numbers there. Like, so so loans are evaluated based on the property's rental income, not the applicant's personal income. Not constrained by your personal income, allowing unlimited property ownership. So you can buy as many as you want of these. No cumbersome personal income verification, and you can close in an LLC corporation. So if you have a business or an LLC, you can close in the business. They prefer it. So pretty cool in that respect. All right. So why are DSCR investment properties loans great? So DSCR loans are a good option for investors because they don't base the qualifications. They refer to as debt service ratio. We're going to get into that. So let's just so here's a couple of the details. Okay, 30-year fixed or interest only, which is cool. I did hear of some arms yesterday, Carlo, when I was kind of inquiring about this.
Mhm.
Single family homes, townhomes, condominiums, multifamily properties with 1 to 4 units. Okay. When you get over 4, it's considered a commercial loan. All right. Loan amounts 250 to 5 million. Again, I'm always going to refer back, check with your lender, see what limits you have, see how high you can go. Um, you also need some cash reserves on hand while the exact amount need varies. The minimum is at least 6 months. It could be less, but the minimum I'm going to have, like, so when I'm talking to an investor to buy a DSCR loan, I want to know how they have some cash reserves. And so when they start out, they might not have, but like you can get somebody ready for this. And here's the thing, if you start working with an investor, they're probably going to buy more than one, and they're going to refer you to their friends, family, coworkers, because if they get into an investment property that's cash flowing, making money because it's market rent, and they didn't have to verify their income to do it, you think they're going to talk about it? And you think they're going to buy one more, two more, three more, four more, five more, as many as they can get? Absolutely. So, all right. Um, DSCR, debt service coverage ratio, is the key of qualifying the DSCR. So so the debt service coverage ratio is of the income derived from the property. So Carlo and I were talking about this yesterday, and I was talking to an agent today about it. She might even be on this call about putting this in your description. Think about this. So if you have a home that could be a rental, has, it doesn't have restrict HOA fees and stuff like that, but it can be a short-term or long-term rental, and the cash flow is there, you could advertise in the description what the market rent is going for, and that you could qualify for a DSCR loan on this property.
Yep.
Just one more way to reel in investors on your listings that you have that might not be an investor type home.
Yeah, and again, one thing that I want to just chime in on, or two things that I find very exciting. Number one, all of the DSCR loans that I'm doing right now are all coming from great agents, like the ones on this call. And the thing is that they just needed to know about it. Like I disclosed another one, and like my agent Brenda, she's so excited about it. She goes, I didn't even know that this was a thing. If I knew that this was a thing, I would have like sent you. Like I didn't know. You know how many people come to me and ask me for turnkey rental properties that I didn't think that they would qualify because income is the main thing that's holding them back. That's one aspect of it that's very exciting about it. But here's the thing: if they come to you and they ask you about this, it gives you an opportunity to talk to them. They're coming
Right.
to you, asking you for your advice, for your opinion. And so again, like even when I have an investor or a first-time home buyer and they come to me and they ask me questions about it, even if I can't help them with the exact program, I find out how I can help them. And there's just so many different things that you can offer. This is just a way to have more conversations, and it's a viable solution for a lot of investors in this market.
Cool. So how this works is you take the market rent. And so an example here. So say your rental income is 5,000 per month. Okay. And your new payment, taxes, insurance, HOA dues, all the stuff that takes place with the payment of the new home is 4,000. Okay. Your rate is going to be 1.25, or the DSCR, what they're looking for. If it's now, I will say that there are lenders that have a one, and what a one means is if the rent's 5,000 and your payment's 5,000, they're okay with it, which is really cool. I mean, there's no cash flow. So, and you're probably thinking the next question, what if it doesn't get this? So does that make sense? So when you take what the rent is divided by what the payment is, you're going to get your number. Like there's one investor that does one, some do 1.1, some do 1.25. So on this example, 5,000 in rents, 4,000 PITI, it's 1.25 is the number that we're looking at, which is obviously going to cash flow $1,000. Okay. So good stuff there. All right. So if the DSCR is low, we call it a non-DSCR. And I had a good buddy of mine talk about it yesterday, and he says, yeah, they'll do it. They just lower the loan to value. So instead of 20% down, it's typically like a 30% down. Again, check with your lender, see what the variables are, see what the stipulations are. If it doesn't qualify or doesn't hit that 1.1, or 1.25. All right. Any questions on that? Rent divided by PITI of the new payment. So that's how you're going to get that number. So when you're looking at what the market rent is for a particular 3-bedroom, 4-bedroom, Carlo, you were talking about adding bedrooms to different homes, making it more rentable or higher
Yeah.
rent because of that reason.
Co-living, yeah, co-living is really, really big right now.
Big
So
right now.
if we have time, we can get into that. But that is, I mean, some of my agents, they're just crushing with co-living spaces right now because the cash flow on those is insane. Another thing to keep in mind, especially with this, that I'm so excited about, because when DSCR loans first came out, they would only go off of long-term rental. That has changed.
Mm,
Now they can qualify off of short-term rentals. So if you're looking to buy a property, it's really, really exciting because they can go off of the short-term rental. So I love that because that
amazing.
was something
Huge
that
change.
I would get asked all the time, and now they are finally, and that's honestly with compensating factors why I think the 1-to-1 ratio, and in some cases even lower than the 1-to-1 ratio, they're allowing that because they know that the long-term rental income is not necessarily what what the investor to buy them is going to do.
Got it. Yeah, because short-term rent's higher than long-term rent. Of course,
Yeah,
So
absolutely. Yeah,
that's why.
yeah,
Yeah.
yeah,
Good
yep,
stuff. All right.
yeah,
All right. So 3 steps to, and I don't want to, I'm not going to spend a whole lot of time here, but this is what we do to get a borrower approved: credit check, liquid asset verification, appraisal. Again, it's based on the credit score. You got to have a credit score, got to have reserves, and then the appraisal is the key component there. So credit score depends on the down payment of other factors. I didn't put a credit score out there because typically you want to see a 700 plus. The higher the credit score, the better the rate's going to be. Rent coverage, annual rent should cover principal, interest, insurance. Down payment minimum 20%, enough to cover 6 months reserves, and then rental types, both long and short-term rentals, which is what you just said, Carlo, which is including Airbnbs,
yeah,
which is cool. So you can do a DSCR on a refinance. I'm
yeah.
working on one right now. And it's just, again, it has to go to the 1-1. We have to get as much market rent as what the new PITI is going to be on the home. So with the cash, have you ever done a cash out DSCR?
Well, yeah, absolutely. Because the cash out DSCR is actually how I helped a client to have the 20% because he did a cash out refinance, DSCR refinance, cash out refinance to get the 20% to buy the other property. So
Crazy.
it's all about knowing the numbers. It's all about understanding that. And that's again why I think it's such a huge opportunity for agents to know the numbers, not only what the house what it's selling for, but what the rents are going for, and
Yeah.
educating. And I'll share with you some really, really cool strategies that my agents are using to get just tons of leads, qualified, people that are interested in doing this. Well, if we have time, we'll
Let's
get to
talk
that.
about it, man. Let's talk about it. I think it's a good spot, man.
So here's what I tell my agents to do, and I share with them and how we're getting these deals done is that go look for, well, first of all, let me back up and just say, do you ever have a shortage of content and you don't know what to post on social media, right? You're like, I don't know, I'm running out of
Yeah.
ideas and I don't know what to post. It's the same thing about why you should buy a house because rates are whatever. What I tell my agents, and what I share with them, is say, go find some listings in your area. They don't even need to be your listings, and find out, get with your lender, calculate what the payment is, and find cash flowing properties. That's what, like,
Mm,
the one that we just did cash flowed $700 a month here in Baltimore.
wow.
$700 a month. So what
Wow.
the agent did was she found a listing, and she also did all of the legwork. She called me up and said, "Hey, what would the payment be on something like this?" So get with your lender. And then what you do is now you're finding deals for people. Now you're out there and you're like, "Hey, great investment opportunity that's cash flowing." And you're not like, not to throw any wholesalers under the bus because wholesaling's fine, but a lot of wholesalers don't know their numbers, right? They think that it's really worth what it's worth and it's really not. And then the investor that's actually doing the fix and flip is like, yeah, but you're not really accurate with your ARV. But the point is that if you can then find those numbers, then you can say, well, this is the purchase price and it's cash flow positive, DSCR ready. Boom, you're having a conversation with that cash flow positive, DSCR ready. You can even put that exact verbiage in your listing, because what is that going to do? It's going to get more conversations. Get with your lender, and then therefore they're screening it, but they need to know the numbers. Because the very first thing your lender is going to ask you is, "Hey, listen," because I have agents reach out to me all the time. They're like, "Can you please market this? Can you please help me with this?" I'm like, "What are your numbers? Like, I know how much you're asking for or what the list price is, but what are the rents going for in the area?" And when we know our numbers, boom, we're there. And then I will help the agent to figure out a way to get the investor into the property. But that's how you can come up with great, great marketing, where you're doing a little bit of legwork and you're showcasing. And if you really want to set it on fire, in a good way, that is, go,
don't,
go
don't
to,
don't talk fire.
because I just we just talked about this 2 weeks ago. We taught a video class with agents, because my top agent here in Baltimore that I work with, he is on fire with his listing videos. And guess what? None of the listing videos are his. He goes and he calls agents and showcases their listings for them.
Hmm.
And we're literally working with a client right now who's relocating from Portland to Baltimore, and she's like, I saw one of his property listings. It wasn't even for one of his properties, but we're getting the client in there for that house, $450,000 in this market. So really, really cool. Yeah,
Amazing, dude.
absolutely. Yep.
Good stuff.
So there's just a lot of ways to really
Conversation.
add value in this market. Yep.
Yeah, conversation. Good. All right, let's go back. Good stuff. Good idea, man. It goes back to having conversations, right? All right, through. All right, this is good. Tips for success: choose your property wisely. Know the market. Know which ones are and which ones aren't. When you're, when you have an investor call you and talk to you, like have a bunch of them available for them. Um, let's see. Gather proof of assets. Have proof of rents ready. Just get prepared. Like I think this is a huge niche market that it's going to be around for a while. We're short on inventory, so why not tap into, like, what if you're talking to somebody in a neighborhood going, hey, maybe they are open to sell and it's a good neighborhood for rentals, right? So it's just one more comment. Be prepared for prepayment penalty. So I want to talk about this for 2 seconds. So there's a with and without. So with the prepay penalty, what it is there's a rate that has a prepay and it's lower, of course, because they're going to keep the loan for 3 years. So I call it 3-2-1 is what I got quoted yesterday. So 3-2-1. First year, it's a 3 points to pay it off. Second year is 2 points. Third year is 1 point to pay it off. So, and then there's a one that's a higher rate that was with no prepay penalty. So you can pick and choose kind of which way you want to go. He's deciding that. And here's the thing. He doesn't have to decide till after we get the appraisal back, right? So if rates do come down, or maybe we do get the 70%, it was a jumbo. So maybe we do get the 70%. Then he can go interest only. So at 70%, you can go interest only on a jumbo. at the 80%, we have to go fixed. All right. That's just through the lender I'm going through. So check with your lender, get the details. It's all good stuff. So educate everyone. Let everyone know about this. I used to do, like Carlo, I used to do more rental properties talking to first-time home buyers, because who knows investors or people that want to buy rental properties better than first-time home buyers that have parents and brothers, cousins, uncles, sisters, all that stuff you rattled off. So it's just a huge thing, right?
Yeah, and then not only do that, like I'm getting so many leads from TikTok and from my YouTube channel, and I don't even have a huge following. That's why, like the other day, like in the real estate Facebook group, they're just like, "Who's crushing it on social media, getting leads?" And I'm like, "Well, define crushing it. Like, if you define crushing it by how many followers you have, then I wouldn't say that I'm crushing it. But if you base it on how many leads you're getting and how many qualified buyers, like the agent that I just put in there, like we are getting like 700 plus credit score clients every day from social media. So it's not about the following, but the reason I'm bringing it up is because put those keywords, put those hashtags in your descriptions, put them in there, put DSCR in there. People are looking for that stuff. Because what happens is they hear about it and then they go online and then they do searches for those. And if your information pops up and you're local, it's really, really powerful because they will reach out to you and they will ask you about it. And then you can educate them on it. So definitely, there's just so much business from people that want to buy a house. We don't need to spend our time trying to convince people. There's people that want homes. They just need to understand that there's programs out there, and it's just a great opportunity to educate and let them know what's going on.
Perfect. I love this loan. It allows you to there's a couple different 203K loans we're going to talk about just briefly, but this is an amazing program for those homes that aren't quite as like ready, move-in ready. That if you, I mean, you can go as simple as appliances. Hey, I just need new appliances. I don't want to spend 10 grand on or 5 grand on appliances. So there's a lot of, so here's the bigger point. How are you presenting the home to your buyers? If you're walking in going, man, this one stinks. This is bad. This needs a lot of work. Look at this. Look at that. Look at this. Or are you looking and are you look like Carlos said, is this the right investment for you guys to literally make 50,000 in the next 12 months just by doing a little TLC 203K and putting some nice upgrades to it, bringing it back to livable, and maybe it turns into a livable home. Maybe it turns into, all right, we sell it and make a bunch of money in 12 months and go buy another one. So, how to, I like to put this, how to turn this into this. You know what I mean? That's a little severe. I don't know if, I mean, I wanted to be drastic here, but so there's two types of 203K loads. There's a streamlined 203K streamline up to 35,000, mainly just anything that's part of the home. And then there's a standard 203K that's more like a construction loan. Okay. It must be at least on the standard, must be at least 5,000 worth of repairs. On the streamline, I don't think there's a minimum. Now, again, check with your guidelines. That might change. They might have put in some, they're not going to probably include, I don't know, maybe they'll do just a door. You need a new front door. Maybe you need for safety reasons, you need a new front door. So, 203K process includes these steps: find a property, make the offer, find an FHA approved lender, appraise that one that does 203Ks, appraise the property, loan is approved and closed, work begins on property, disbursement and payments. The cool part about you as an agent, you get paid at close. You don't have to wait for the repairs to be done. Everybody's paid. So that's the cool part about the loan. Then the lender takes over on the 203K loan. Cool part, 1 to 4 family. That has been done at least 1 year. Can be used to convert a 1, 2, 3, and 4 unit. Lender specifics, again, check with your investor. A multi-unit can be converted to a single family. There's a lot of different things you can do with this. Pretty cool way to look at it when you're looking at homes. So it's just an amazing conversation piece that you can go, hey, you don't like this, don't like that, or like, man, the appliances are all old, hot water heaters hold, furnaces hold, the handlers hold. It needs 20 grand worth of stuff or 10 grand worth of stuff. Let's go over the numbers. Let's talk about that. So must be owner occupied. Again, 1 to 4 unit must be owner occupied. Rehab is limited to the interior only. This is for a condominium, of course. Condo, you're insured from the walls in. So condom, the maximum amount of loan cannot exceed 110% of after improved value. So you buy, I'm going to use a simple number. Buy a home for 100, you put 10,000 in it, and it appraised for 120. You're good. So up to 110% of appraised value. in today's world, like you can show them the cost of waiting and what's going to happen over the next year, 2 years, 3 years. Pretty cool stuff. So here's some eligible improvements. Again, I'm going to put this PowerPoint with the recording on inside of Fresh Agent Marketing under the Tuesday class recording course. So there's 6 months, 9 months worth of recordings there in classes. But these are the eligible improvements that you can do. And then I won't spend a lot of time here, but like this might not be a bad thing to carry with you. Like carry this part of the PowerPoint with you and print out and go, yeah, can I do this? Can I do that? Window and decor placements and exterior wall residing, weatherization, including storm windows, purchase and installation appliances, including freestanding ranges, refrigerators, washers, dryers, dishwashers, microwave and ovens, replace and upgrade existing HVAC system, replacement roofs, gutters, and downspouts. Like there's all like you could make this thing pretty, right? And with the upgrades, the value is going to go up. So pretty cool. Major ineligible. There's some ineligible stuff, so you guys can look over that. Again, maybe take this with you, and if he starts talking about, can we do this? Can we do that? You can kind of bring this up and kind of go over it. But it's just a great, conversation piece when you're out looking at homes. Contractor requirements: borrower must be licensed, insured contractor, complete rehab. No exceptions. Most lenders have and can recommend approved contractors that they already have approved with them as a lender. Okay. Here's the cool part: when loan closes, you get paid. You gotta bring us cookies. I was just kidding, but I thought that was kind of funny. Got to bring Carlo and I cookies. Disbursements.
Yeah, for sure.
Like what kind of cookie? Like I'm a peanut butter cookie guy, so I'm just putting it out there.
That's it. That's it. They can just get a case of those. We're good.
Case of all right. All right.
Yeah, we're good. I like the same stuff. We're good.
All right, cool. All right. So features of the standard 203K FHA. So all standard 203K must have the FHA approved consultant. So there's approved 203K consultants. Structural alterations, repairs cannot exceed 50% of completed appraised value. So there's just, again, eligible improvements. This is for the big one. So here I could go back to this: elimination of health and safety hazards, changes of aesthetic appeal, reconditioning, replacement, plumbing. So it gets more severe. Stuff you can't do: can't put in a hot tub. I wish you could. Gazebos, alterations, and stuff like that.
Yep.
Yeah.
So please ask all the questions that you have, put them in the comments, and we're going to answer all of them for you. So thank you so much, Ben. Just to answer a quick question for you, because we'll have a Q&A at the end of this, right? So that way we'll flow through it. But this is for people that want to live in the property, Ben. It's not for investors. So
right,
the 203K loan is not a fix and flip product. It is for people that want to own a home. And what's so exciting about that is that you have an opportunity to reach out to, let's say, somebody who's looking for a home, but they haven't found something yet because they keep getting outbid or they can't put an offer in that gets accepted. Well, we've been using this as an opportunity to go to some of those buyers and be like, hey, listen, are you open? I've got an amazing opportunity I wanted to share with you. And there's a possibility here that you could get into quite a bit of equity here. And just wanted to show it to you. You're going to people that want to buy houses, primary residences. So you don't have to worry about an investor coming in behind you. I know what you mean. Like if you show somebody something and then they get it under contract, just wanted to clarify that for you so that you're not worried about that. And we can get into it more. But any questions, please put them in the chat and we will make sure we answer all of them for you. But great question.
Cool. Great question. Yep. All right. Timeline. So when the loan closes, disbursements happen, 10% holdback. So there's some small requirements. Again, you don't have to worry about this stuff. I just wanted to put it out there. Here's borrower must have 3% into the deal. Seller sessions can equal up to 6% of the purchase price, which Shelby's on here, a good friend of mine. He said, use it to buy down the rate if you want to, I mean, that's a great way to give them a better rate, is to have some seller concessions on an FHA loan. So here's what it looks like. Purchase price plus repairs equals total loan up to 110%. Loan amount can go up to 100% of appraised value. Repair. So you got to have 3.5% of the purchase price plus repairs. So if you're putting 100, you're buying it for 100, the repairs are 20, it's 3.5% of the 120. All right. And it can appraise up to 110 of that 120. Okay. And it must be, the repairs must be done by a licensed approved builder, no exceptions. There's some self-do stuff. I'm not going to get into it. I don't know if you can check with your lender, make sure that's even out there. I just took it out. That can get a little scary. Okay, educate. Just one more conversation piece. This week, talk about DSCR. Next week, talk about 203K loan. The week after that, we got another loan to talk about. So this one's exciting. And you can do this. This is an FHA 2 to 4 unit homes. And Carlo, you like crush it on these. Um,
Can I
Financing.
share
Yeah,
can I share
please.
something with everyone real
Yeah,
quick?
yeah.
So again, like the lending side of it is, I love it. It's my favorite, but I'm just so passionate about the marketing piece of it because I love having conversations. So just I wanted to share a quick marketing hack with everyone because, like I said, it is our goal that you walk away with a couple ideas that you can run with right now. I can't stand when, because I always say something, and the reason why I'm bringing this up is because aside from our family and our health, there's nothing more valuable than our time. And I want to know that if you spend an hour with us, that you're going to walk away with, you know what, I got something that I can go put into my business right now. Just one idea could change everything for you and help you to get business in this market. So one of the things I share with my agents is get with your lender, and every single guideline for these programs is a video.
Mm.
Every guideline is a video. You will never run out of content ideas again. My agents are like, "Oh my goodness, like I just did a video on can you use DSCR and buy a home in an LLC?" A lot of people have that question. What's the credit score that you need or whatever? So get with your lender to get with the guidelines. It's not your job to know all the guidelines. It's your lender's job to protect your time, but that doesn't mean you can't leverage it. That doesn't mean that you can't take that. And now you have infinite things that you can talk about. And again, people are reaching out to you as the go-to authority on these particular types of loans, and you're helping people rather than trying to convince them. So just wanted to share that one marketing hack with you that you can use right now.
Love it. Great job, man. Leverage time. So is everybody doing okay right now? Is everybody good? Great conversation piece, right? Couple deals here. Okay. Is anybody working with investors right now? And this would be a great conversation piece that maybe you didn't know about that now you do. All right, here we go. Okay, what type of properties? This is pretty cool. So, like single family, 2 units, 3 units, 4 units. Do you want to be a homeowner and an investor at the same time with cash flow? It's pretty crazy. I wish I'd have learned this when I was a kid, growing up. It's like, man, like if like before you really get into the family life and all this stuff, like what an amazing opportunity to walk away with. We call it doors. You buy a 4 unit and it's 4 doors, right? And so pretty cool. For 3 to 4 units. Now, you want to talk about this one because I think this is huge. Like there's some stipulations on the 3 and 4 unit. And Carlo, you can take this one, man.
Yeah, so the main thing that a lot of lenders miss is that when you're buying a 3 to 4 unit, even if the buyer qualifies with their income, the underwriter is going to want to make sure that the property is self-sufficient. And simply what that means is that the rental, 75% of the average rent on the appraisal will cover the mortgage payment. And that's something, and whenever I do classes like this, I always reach out to my underwriter because again, the guidelines are
Yeah,
constantly changing. And
yeah.
and I asked him, Chris, he's actually the vice president of a mortgage company underwriting. And I said, if there's one thing that I can share with amazing agents, and we're doing a call about the FHA multi-unit, what would be the one thing you would share? He said, make sure that because even lenders miss this. So make sure that the property is self-sufficient. And again, what that means is that 75% of all rental covers the mortgage payment. Even if the buyer qualifies debt to income ratio wise, it doesn't matter. They're still going to look, because what they're looking at it from a risk standpoint is, what if the buyer loses their job or something like that? Can the property sustain itself?
Sustain.
Yeah. All right. So that's the main thing. But again, I look at every program as, how is this an opportunity to have conversations and to speak with people? And the beautiful thing is that a lot of times when I speak to clients that might reach out to me about a particular product, like they might call me and say, hey, Carlo, I'm really interested in FHA multi-unit. Can you speak more about that? I may not even necessarily end up helping them with that. Maybe I get them into a single family, right? It's
Mhm.
about finding, we really just want to have people raising their hands and reaching out to us and thinking about us as the go-to real estate professional that can help them and that informs them. I love it when I can teach someone something. I love it
Absolutely.
when they learn something from us or when they're like, hey, I didn't know that. And that really helps us for the positioning because a lot of times agents reach out to me. They're like, Carlo, how do I differentiate myself from all of these other agents that are in my market? What can I do? And I'm like, one of the best things you can do is to be a great source of useful, accurate information. And then they're going to think of you. But to get back to the FHA multi-unit, that's the main thing to think of. And I did an entire class here in Baltimore. I filled up my office with people that came in, and I did house hacking. And I basically just said how you can buy multi-unit properties because right now, like affordability is very, very expensive. I helped a
Right.
young lady buy a house where she's renting out. She bought a 2 unit. She didn't buy a 3 or 4 unit. She bought a 2 unit. And I didn't say that you can live in it for free, but I said, hey, how about we get you into a home and you only have to pay 50% of that mortgage. Let me show you how to do that. And she was like, great. So again, it's having conversations. And that's a great way to do it with a lot of these programs that right now, quite honestly, a lot of people are overlooking and they're not talking about them.
Yes. Excellent. All right. No questions. Good job. All right. 3 to 4 units are required to pass the self. So we already talked about that. Again, it's the PITI, principal, interest, taxes, and insurance. If there's HO dues and stuff like that. Um, Income cannot exceed 100%, 3 to 4 unit properties. Using rental income for 2 to 4 unit properties. Rental income for the 3 and 4 is calculated by using the appraiser's fair market rent from all units. So again, you can do the homework on this, including the unit the borrower chooses to occupy and subtracting a greater of 25%. So that's where we get to 75%. All right. All right. Educate. So we're talking four programs. We got one more. Any questions so far? I think we're doing okay on time. Any questions? You guys have any questions at all whatsoever? Please shoot out there. But about the FHA2, like if the more you educate, the more conversations you have, the more closings you're gonna have. Just a conversation piece to let people know. Even if you don't do the investor loans, or even if you don't do the 2 to 4 units, it lets them know who you are. And if they come across, it's not just your people that know, like, and trust you, it's their friends, family, coworkers. You might run into somebody that has an investor that's looking to get into it or already into it that buys homes on a regular basis, right? That's the beautiful part about this.
Can I
They
can I
just
share a
don't,
quick
yeah,
let me just share a quick example of that. Sometimes we get so caught up with, I don't offer that. So I'm not even going to mention it or I'm not even going to talk about it. But if you're seen as somebody who's adding value and you're putting out information out there to try to help them as much as you can, you're going to find that people are going to start asking you about other things that you do.
come back to, yeah,
And
for
just
sure.
a perfect example, like I'm a mortgage lender. I am not a mortgage servicer, but I get questions all the time about recasting. I
Mm,
don't directly recast. I'm a lender, not a servicer. But
yeah,
I talk about recasting all the time because it's very relevant in this market, especially if someone's trying to put in a non-contingent offer, they want to buy another property. Just taught a class on this to agents yesterday about being a buyer and seller in the same market. So don't like the main thing is don't get in your own way, right? Because I find that a lot of times like we were like we in one breath we're like, well, we need more business, but then in the next breath we count out all this stuff that we could be doing because we have these beliefs around it about what we can and cannot talk about or what we should and should not talk about.
there you
So
go.
definitely get it. We need to get out of our own way and just add value and just put it out there.
Good stuff, man. All right. Homestyle renovation mortgage, primary and single family investment homes. So this one, just like the 203K, except for it's called a Homestyle for primary and single family, and you can do investment homes, single family investment homes. So Homestyle renovation mortgage provides a convenient and flexible way for borrowers to considering home improvements to make repair. Did anybody know about this one? I didn't know about it till, what was it, Monday? I was told a good buddy of mine, our good buddy Brad, like Brad's like, hey, do the home style. I'm like, okay, what's that? He goes, oh, you guys suck. So no, renovations with first mortgage rather than the second mortgage. So a lot of people will try to do a first and second or whatever. They try to put money on their credit cards, to fix up, borrow money from other people, like to try to do the fix ups once they buy the home. This one allows you to do it right off the bat. So purchase or limited cash out refinance. 15 to 30 year whoops, I missed it. There you go. On all eligible ARM products, a fixed rate mortgage, 1 to 4 unit principal residences. Why does it keep moving? What's it? There we go. 1 unit second homes or 1 unit investment properties, including units in condos co-ops. So I left it in here. I was unsure of it. So MH is modular homes. I would check with your investor. That's going to be a tough one, but I pulled this off the Fannie Mae sheet. So I don't know if they've changed that. Just check that out. I didn't want to rule them out because there's some really nice modular homes out there. So manufactured modular, so you can kind of look at both. Modular is going to be okay. Manufacturers might be the question, so just check that out. Any type of renovation or repair is eligible if it's permanently affixed to the property. Renovation should be completed within 12-month period from the date the mortgage loan is delivered. All right. So for purchase transactions, loan to value ratios, purchase price and cost of renovation. So let's see, your refinance transfer, the LTV ratio is determined by dividing the original loan amount by the as completed appraised value of the property. Did you know about this, man? It's pretty cool, right? This is a great, I mean, for the primary resident and an investor. So primary dwellings are eligible with Homestyle renovation with eligible renovation funds capped at the lesser of 50,000 or 50% of as completed appraised value. Borrower may not receive cash back at closing, zero cash back. So like on a limited cash back on a typical primary resident, you can get up to 2% or 2,000. This one's a negative on that. Zero, not permitted. 1 unit principal residence. Here's some LTVs. 1 unit principal residence to 97 LTV. Again, check with your investor. I took this off the Fannie Mae site. Of course, there could be updates to it, but it said 97 LTV. CLTV is combined loan to value, and I don't even know what H is, man. So I don't. I'll be honest when I don't know something. I'll find out though. With fixed rate mortgage, 95 with ARM so there's ARM rates available in DU. DU is a thing, not a big deal. So 2 unit principal residence, 85 LTV, 3 unit, 75 LTV, and a 1 unit second homes, 90% LTV. So there's all like, are you talking about second homes? Are you talking about 2 units, 3 units? Like, just are you having conversations? If there's a will, there's a way. If there's a program, talk with your lender, find out about it, and let's help educate our buyers, whether they buy it or not, right? Leave them in a better place than when we found them. Let's see, 1 unit investment properties up to 85 LTV with fixed rate mortgage or an ARM. Limited cash out or 75 CLTV with fixed rate mortgage or ARM for properties underwritten manually. Like, so I don't know if there's a whole lot of manual going on there, but you can check that out. Borrower must choose his or her own contractor to perform the renovation. Lenders must review the contractor hired by the borrower. Borrower must have construction contract with their contractor. Okay, kind of like doing a new construction loan, but it's on a home that's already there, just doing some repairs. I'm not going to really this renovation cost payment reserves. You guys can read this over. I guess the bottom line when it comes to all this stuff is we give you 4 different scenarios, 4 different programs to talk with and let everybody know. And, I love the idea about the video marketing. We're doing a video marketing class next week. As a matter of fact, I'm going to throw some of this stuff into it. I'm going to show you how to find unlimited amounts of content. But when it comes to this, the more you're seen, right? All the stuff we talk about in fresh marketing is how am I seen, remembered, and with the people that already know, like, and trust me. And that's the big point here. Whatever you like, in sales, whatever we talk about is what we sell, right? If we're just talking about the limited basic programs, we're going to sell those. If we start dibbling first time home buyers talking about, hey, if you know anybody, I specialize in investment properties. I specialize 203K loans. I help people get into those. I have lender relationships that specialize in these type of loans. So if you find something that isn't quite right, but is a good investment and you need some money for repairs, we got you. So it's just shifting that mindset. It's a huge shift. So
it really is. I mean, at the end of the day, there's so many programs that people just are unaware of that once they become aware of it and you get that, oh, I didn't even know that was possible, or I didn't even know that was available, or I didn't even know that was something that you can do. It's great because you have so many people that want to buy a home rather than trying to convince people why they should. And again, I keep saying that over and over again is because I feel that like the content should really be based on educating, not convincing. And a lot of the content out there right now, especially with where the rates are, like if somebody doesn't want to do something, they're not going to do it, especially when it's coming from someone that gets, that they feel in their eyes gets compensated to do that. But when you shift that mindset to, I'm going to help people and I'm going to educate them, and I want to help the people that, because here's what we don't want. We don't want the people who can buy, but don't know that they can. There's so many
Yeah,
of them
good
out
point.
there that they're not even
They don't even know.
trying, because they don't know. They're like, they're not even trying. I mean, I literally have had people come up to me and like, I didn't know I could buy a home. I didn't know I could get down payment assistance if I wasn't a first-time home buyer. Yes, you can. I didn't know I could get down payment assistance if I make over $100,000 a year. Well, in certain areas, like where I am, you absolutely can. I didn't know I could get a home if I have student loans and I have this certain amount. Yes, like they're like what we're fighting against, and here's what I say all the time is that the biggest problem right now in the market are not the rates, and it's not the rates, and it's not the inventory, it's misinformation. That's the
And lack of
biggest challenge.
conversations.
Yeah,
Lack
that's
of
the biggest
conversation.
challenge right now, is that we are fighting against all of the misinformation that they're getting from their friends, from their family, from their coworkers, and even misinformation from social media. That's what we're fighting against, way more than just the interest rates. So I look at that as an awesome opportunity to get out there and have positive vibe, positive energy, be upbeat about it, and just share stories. I love that about everything you do, Scotty. Is everything
Thank
is
you, man.
just, yeah, and share stories. And one other little marketing thing is, just think about it this way: if one person has the question, 20 people want the answer. So there's things that
Uh,
throughout the
Good
day you're
question. Yeah.
answering that you're just like, everybody knows this stuff. Like everybody, but you ever have somebody like reach out to you and be like, what's the EMD? And you're like, seriously? Like, you don't know what that is? But like, they don't.
They
And
don't.
they need your
Yeah.
help. They need your help.
Right.
So one of my videos on TikTok, like explaining seller concession, I'm like, I'm not doing a video on this. Like everybody understands that. But no, like
No.
that's the one that they're like, this was so helpful. Thank you for explaining the different programs and how some concession is higher than others, some the more money you put down, all that stuff. So you're very knowledgeable. Don't discredit what you know. Learn more and put it out there and share it with share it with people, share it with buyers. Get out there and do it, because that is how you will work with as many buyers as you want to work with, and then just helping them with these different loan programs.
Cool. Diane's asking, what's the minimum loan amount? Again, check with your lender, but what I read was 250. So some investors will go less, but typically on that type of loan, I mean, and there's maybe a lot of investors. I don't know
for
if
for, D,
anybody. I got a
for
couple friends who.
DSCR.
Yeah.
So I can answer this one actually. So the minimum loan amount for DSCR is 125.
Okay.
Yeah,
Loan amount. Loan amount.
loan amount.
Okay.
Yeah,
So if you're buying 125, that it won't work. That loan amount has to be okay.
loan amount. That's a
Okay.
great question, Diane,
Yeah.
because a
Great
lot of
question.
times when agents reach out, there's certain properties that just not going to qualify for that. But yes, 125, great question. 125 loan amount, not purchase price, because you're factoring in the fact that they're putting 20% down. Great
Cool.
question on that.
Cool. Anything else? Any other questions about all those programs? We covered the DSCR, we covered the FHA 203K, we covered the FHA 2 to 4 unit, and we covered the Homestyle.
Yeah.
And it's
Any
all
questions about
recorded.
yeah? Any questions
Um,
about this or how to market any of them? Scotty and I we'll geek out on this stuff. So
okay.
we'll just sit here and talk for an hour about like, well, how can we get like
What about this? What about that? Like, like we came up as a group. We're like, what? Put it on the listing that it's DSCR approved. Like,
yeah,
we're like, what's that? Like,
yeah,
you might get a call just to go, what's the DSCR?
yeah,
Like now you got a
yeah,
buyer. Yeah,
yeah. So when you say how do
Sonny.
I market it, happy to answer that. So the first thing I would say is how are you marketing right now? Like, are you on social media? Like, how are you getting business right now? Here's how I would market it, and then if this isn't relevant to you, let me know, and then I'll cater it to however else you market. But right now, the number one way that I market is by educating via excellent, fantastic, great, awesome. So what I would do is I literally would start putting content out there on TikTok with the hashtag DSCR, and I
Mm,
would just start going through the guidelines and educating them on the guidelines. One. Number two is I would start with stories. And I don't mean stories what I mean by Facebook stories or Instagram stories. What I mean is by sharing examples. And if you don't have any of your own examples, you can literally share this call. Just be like, hey, listen, I was just on a call with a bunch of fellow agents, and we were learning about this amazing program. And hey, did you know this? So sometimes people think that when you're sharing an example and you're sharing stories, it has to be your own personal experience. No, you just have to be authentic and real, but it could be about something that you heard or something that a fellow agent did or something that a fellow agent closed, or maybe your lender, reach out and share that. So that's what I would do. And then at the end of the day, I know that this probably is, a lot of people say this, but they don't mean it. Whatever you choose to do with marketing, choose to be consistent.
Mm.
Choose to be consistent. Like if you're going to agree to do something, make sure that you just agree to do it for a period of time. And even if it doesn't look, I mean, I put out a lot of great content, and sometimes I'll have people reach out to me like, I've been watching your stuff for a year. And I'm like, you're just calling me now? Like you could have called me later with but like just be consistent when you're putting it out there. And I'm not saying you need to do video to be successful, because some people don't do any video and they're fine. But what I'm saying is whatever you do choose for marketing, choose to be consistent. I hope that helps.
I'll just add some stuff to it. I don't know if you guys have ever heard of, and I talk about it all the time, and I'll just talk about it till I die. Export context by Covey. How I would do it is I would use export context by Covey. This is what it looks like. So export context by Covey. It's on Google Play and Apple. Here's what it looks like. The logo. It's a $5. Oh, it's down to $4, man. So they've lowered it. It used to be $4.99. Now it's $3.99. So we're got a little discount today. If you haven't downloaded Export Context by Covey, one-time fee. I don't have anything to do with it. I don't own it. And you download it, hit the button within seconds. It gives you all your contacts out of your phone. With that, I would absolutely positively go through the whole list. Minus, if you don't want to call their agents that you have in your phone or whatever, but everybody you've ever talked to in your phone, like, hey, I just came across your number in my phone and just want to call and see how things are going. What's happening? Any big plans for the holidays coming up? Hey, I just wanted to share with you. I don't know if you know anybody, but I got this really cool loan where you can buy a home and you don't have to show income. The house has to qualify with market rent, but I just want to know, if you know any investors that are looking to get into investing in real estate, it's unbelievable. All the way up from 1 to 4 units.
We got a question.
If you make enough of those calls, I mean, come on. If you make enough of those calls, what's going to happen?
Yeah.
It's just conversations equals closings. Clothing too. You do get clothing with closings,
when you do have conversations, you do have clothing. So that is,
you do have clothing. Clothing.
You
You can get clothing.
Yeah. Well, but at the end of the day, it really does come down to that. And what I love about real estate is that you really can have a conversation with almost anyone about real estate. Like I have this game that I play with my agents where I'm just like, start any conversation and I will lead it back to real estate in a way that is not, that's not awkward. So it just, we have a great opportunity because we're helping people with one of the biggest purchases they're going to make and the most important one. So the question was, are these types of loans for residential only? Do you mean residential or do you mean as primary residences? Because all of these are really
the ones we talk about are mainly the ones we talk about today were residential. I think he's maybe residential or commercial.
Okay, got it. These types of loans for it. Got it. Yeah. So for the most part, yes. But if you're looking to get
1 to 4.
If you're looking to get 1 to 4 mainly for these types, yeah, because the other thing is when you get into those larger homes, they're really looking at the asset itself and the tax returns of the building and things like that. So yeah, for the most part, what we're talking about today, residential only, yeah, and that's DSCR loans, correct? Yeah, DSCR loan, correct. Yep. Any
Cool.
other questions about anything before we rock out? Scotty, I just want to say I always thank you, and I love doing these with you, man. It's cool.
I love doing these too, man. Yeah, it's a lot of fun. Did anybody get anything out of today? Does anybody have a good conversation piece that they're gonna pick up the phone? And I would love to hear your success stories. Bring them back to the class. I know you'll have them. If you have enough conversations, you'll have them. And I'll just and to make the calls easier, I'll give you this. I look at, and this is what I did for me. I looked at every call that I make as there's a dollar assigned attached to it. I just don't know how much. but there's a huge dollar sign for what we do, because what we get paid a lot of money to do what we do, right? I mean, really, like as a real estate agent, you make a lot of money when you get a sale or you work with a buyer to make a purchase. And so if you take and go, all right, how many calls do I have to make to get a buyer or seller and close on a deal? And then you divide how many calls that is by how many no's you got, and there's a dollar attached to that. So I turned it into a game for me, and I look at every no that I get has, and sometimes it's a, it's a lot of money per no. And so I just go, how many no's can I get today? Because that's how much money I'm depositing into my bank account eventually. And if I never get the no's, I can never make those deposits into my bank account. So that's what I did to make the calls easier. But it's more important than that. I'm helping somebody with their financial wealth. Real estate is one of the, like, Shelby, what's the number? 90% of all millionaires are from real estate. Isn't that 90% of all millionaires in the United States are from real estate? Because they're buying and selling properties, they're owning properties. The appreciation's huge. So just do your best to leave people in a better place, educate and keep learning these programs, like we are together as a group. Share these programs, even if you don't know the answer. Find, like, you have somebody that does. Get a hold of one of us. I'll get you back to your lender. Call your lender relationship. Ask them questions. Research it together. Put a marketing plan in place. Hold each other accountable to make calls. Get an accountability partner with you and your lender to make calls together to talk about these loans. And let's just help people get into homes, get out of homes, fix up homes, get into investment properties. Rent's not going down. I think a good buddy of mine told me that since 2000, rent's gone up 130 something percent. And lack of inventory, rent's going to keep going up. So people are going to need to rent because affordability is tough. So talking about this stuff, it's just going to be more prevalent and a bigger opportunity for you guys. So with that said, Carlo, man, love you, bro. Appreciate you. Love all your marketing that you do. Follow Carlo on TikTok. He's amazing. He's just got a knack for video. And we'll see you guys same time. Well, we're gonna do video marketing next week. So I got some tricks up my sleeve for video marketing next week on Fresh Agent Marketing. Catch the recordings at freshagentmarketing.com under the Tuesday class recording. And we'll see you same time, same place, right here on the web. Take care, everybody. Be safe.
Yeah.